What is going on, all of you badass apes? My name is Tyler and welcome back to the channel. So there's a lot of things you guys need to know. There's a lot of rule changes going into effect next week. There's the possibility to see a gamma squeeze effect next week and throughout the remaining weeks of September. So we do need to talk about that. These potential rule changes, we're going to break down exactly what this is. And I think a lot of people are misconstrued of exactly what is going on. So we're going to set some clarity on that, as well as talk about the major market event that is happening on October 1st. This is going to be a huge thing for AMC, but the overall market. So let's go over all of this information. Drop that like on the video, subscribe to the channel, and turn on that notification bell so you'll be notified in real time when these videos are uploaded. So let's briefly go over the move that we did see on Friday. Obviously, it was a green day, up 1.31% in regular trading, up 16 cents or 0.39% in after hours trading. We did close the day on Friday at $41. I almost said $31 at $41. So it was a green day on Friday. We're likely to see another green day coming on Monday, especially with all of these rule changes that are being implied. I think this is icing on the cake. Now, let's get into the rule changes that are going into effect. The first one on September 1st, the second one on September 3rd, and then we are going to talk about what is happening on October 1st, because that is very important, and this is only about 1 month away. So definitely something you guys should have on your radar. And I think honestly what is happening on October 1st is going to be even bigger than these rule changes, but these rule changes are huge in and of themselves as well. So first things first, coming on September 1st, guys, we're just going to read this. I'm sure you have heard this, but we're going to break it down a little bit more so you're fully aware of the scope of what is going on. So during his opening remarks, DTCC's Bob Stewart, Executive Director, Product Management for Institutional Trade Processing, discussed the impact of Phase 5 of Uncleared Margin Rules, UMR, for over-the-counter derivatives, which kicks in on September 1st, 2021. In quotes, there will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians to keep safe collateral. As a result, UMR will likely require many buy-side firms to make significant changes to their existing collateral management processes. So essentially what this is, OTC, like I've called out many times on this channel, is not over-the-counter stocks like you would probably think when you hear OTC. This means over-the-counter, so basically off of the books. And what this is basically banks and hedge funds and institutions, they make most of their deals not on the public exchanges. So when they make these deals for billions and billions of dollars, they are using different forms of collateral. They're using cash as collateral. They're using different stocks and basically collateralizing these different stock obligations into collateral positions or collateral to stay in some of these positions. So essentially, well, first things first here, they are not going to be accepting bad collateral anymore. So there's going to be a need for high quality collateral. And also third parties are going to have to hold on to this collateral so we don't have any more Archegos type effects or Archegos fallouts actually happening in the broad economic system, because that is a huge risk. So that is really what this is for. But on September 1st, a lot of margin calls are going to start going out, as Bob Stewart, DTC's executive director, did say himself. So you're going to see a high level of margin calls, a need for safe collateral. If firms don't have safe collateral, they're going to be margin called and they're going to have to produce safe collateral. So that is first things first, that is happening on September 1st. Also, on September 3rd, we have this, the DTC Important Notice National Securities Clearing Corporation. Obviously, it says NSCC has proposed to increase the minimum required fund deposit for each member from the current $10,000 to $250,000. NSCC has received regulatory approval on the proposal rule change SR NSCC 2021-005 on August 11, 2021. NSCC is providing this notice to its members of the implementation and effective date September 3rd, 2021. On the morning of the effective date, members with a fund deposit below $250,000 will incur a deficit that will require funding by 10 a.m. So you're effectively going to see tons of margin calls coming in. And something that I want to point out is that you may see this and think $10,000 into $250,000. That's not a large amount for these hedge funds and institutions that are doing the trading with the DTCC. Now, I do want to point you guys to Kringle Kitten's Twitter page. And right here it says providing some clarity. Every NSCC participant must provide a collateral minimum required fund deposit example margin, which will be increased from 10,000 to 250,000. Some of the biggest members have dozens of registered accounts with the NSCC. So essentially, all of these different accounts are going to have to go through these margin requirement raises. And when you're thinking about a bank or whatever, whoever is with the NSCC, say JP Morgan, they probably have 20, 30, 40, 50 different accounts that will have to go through these margin requirement increases. So this is definitely going to be an amount that is in the billions of dollars. So you're going to see this draw of liquidity from the overall markets. Some of these firms may have to liquidate on their short positions to draw out some of this liquidity, right? It says part 4, out of 150 members under the study, 46 members would be impacted by the proposed $250K minimum required fund deposit, with 28 members would have been required to deposit more collateral if this new increase had been implemented. So some of these members are probably not going to be able to fulfill the margin requirements for all of their accounts, especially if they have a lot of different accounts. So that is very important. This is definitely going to be a huge thing. It's not going to kick off the mother of all short squeezes, but every domino that continues to fall is getting better and better for the AMC short squeeze. That is one thing you guys cannot forget. All of these things are going to culminate into the mother of all short squeezes. It's not going to be just one thing that is going to cause the mother of all short squeezes, but this is definitely another step in the right direction after we have seen DTCC 005 being implemented in August. Now this is finally coming to fruition, and it's going to be a huge problem for the hedge funds and institutions that are short on AMC stock. And we've already seen a lot of hedge funds and institutions have already came out and shown their dislike for these new margin requirements. So definitely looking very good. Everything we can tell, hedge funds, institutions, they're scared, and by all means they should be. Now, guys, let me draw your attention to what is happening on October 1st. So I actually did call this out in one of the last videos, but let's just read it again. So the Federal Reserve has published capital requirements for the largest banks it supervises that will kick in on October 1st. Goldman Sachs will have to comply with the highest capital requirements out of all 34 banks subject to the Fed stress test, with a common equity tier 1 requirement of 13.4%. This year's stress tests examined 23 banks, with the remainder of the firms on an every other year test cycle. The capital requirements for those remaining firms will be based on last year's stress test. So take a look at this, guys. Basically, the minimum money they have to keep in their accounts for all banks is 4.5%. That is to cover any potential losses, any big hedge funds, institutions, or market downtrends that does happen. So that is in the blue right here. You guys can see Morgan Stanley, Goldman Sachs, HSBC, DWS USA, UBS, Credit Suisse, and JP Morgan, the top banks that are listed in this example. Now, as you guys can see here, stress test buffer, this is the green. This is because each bank went through a stress test, meaning they were put to the test. If the stock market went down 55% and the economy was in ruin, would they be able to continue to lend to people and keep money flowing in the overall system? Now, these banks, they were deemed to not have enough capital on hand. So they went through this incredible raise to their capital requirement ratios that they have to keep in their treasuries. So take a look at these green bars. Goldman Sachs up 6.4% plus the GSIB surcharge. So all in all, Goldman Sachs is going from about 4.5% capital requirements all the way up to over 13% capital requirement, 13.4% to be exact. JP Morgan Chase at about 11%, and all these other banks even higher than JP Morgan Chase. So when you're talking about this whole situation, where do the banks get their money from? They get their money from their clients that they do lend to, right? So what is going to happen? The banks have higher margin requirements, essentially. So they're going to have to go to their biggest clients, which are the hedge funds and institutions, which borrow billions and billions of dollars from them, and say, hey, we have higher requirements of capital we have to keep in our treasuries. You guys have higher capital requirements, and we're going to need a little bit more money for you guys to keep all of your money outstanding, just because the Fed, the bank of the banks, is telling us we have to do this. So I think this chart does a very good job of accurately representing how much of a change they're going to have to their capital requirements that they're going to have to keep in their treasury treasuries, right, in bonds or safe collateral, usually treasury-backed securities. So that is basically the gist of what is going on. I think this on October 1st is going to be the biggest margin call hedge funds and institutions have ever seen in the existence of the overall stock market. So I do think you're going to see some huge price actions with AMC stock, obviously from September 1st, this week that we are going into, obviously until October 1st. So this next month is going to be very, very interesting. Now, let's go over this potential for a gamma squeeze. And yes, we do have a potential for a gamma squeeze. I'm going to call it a gamma push the next couple of weeks because there's nothing too significant. You do see at the $45 strike and the $50 strike on these next couple of weeks, you do see that increase in open interest, but most of the open interest is held at the bottom of the option chain. So basically at the farthest end strikes that there is. So you're not really going to see a full-on gamma squeeze until we do get to September 17th. That is really where you're going to have a high likelihood to see a lot of gamma activity going on, mainly from the calls, because we do have 114,403 calls that are currently in the money, 245,027 that are out of the money compared to puts. In the money puts, you're looking at 34,622. Out the money puts, you're looking at 337 and 56. Now, a lot of these out the money puts are way out the money. You're talking the $20 strike to the 50-cent strike. So obviously, you're probably not going to see a lot of shorting going in from the open markets here. You're not really going to see this reverse gamma squeeze effect by a lot of these puts running into the money, in my opinion. You're going to see a bit of a gamma squeeze, obviously, on September 17th, and we are still about 17 days away, about, I don't even know what that is, 14, 15 trading days away from actually seeing this expiration come around. This is a monthly expiration date, so it's going to get very volatile, and by the time this does come around, September 17th, you're going to see a lot more options on the option chain. You're going to see a lot more open interest. You're going to see a lot more calls that are in the money and a lot more calls that are out the money. So definitely, in my opinion, you're looking at a pretty substantial gamma squeeze that will be happening on September 17th. Factor in everything that we have talked about, even the fact that the banks are getting these new margin requirements. Essentially, they're probably not going to wait till last second, right? So they're going to probably start doing this the second half of September, which does fall in line with this huge options expiration week that we do see on September 17th. So all in all, guys, it's looking very bullish. Stay tuned on this channel for a further in-depth video about this situation heading into next week, because it's going to be very volatile next week. It's going to be very volatile for the next month or so, or about 2 months, really the remainder of the year. So that is all for this video. That is all the important information that you guys need to know. Drop that like on the video, subscribe to the channel, turn on the notification bell. Also, let me know down below in the comment section what you guys think about all three of these events that are coming up. Which one do you think is most important? I tend to think October 1st is going to be the most important one for the biggest margin call we have ever seen in the history of the stock market. So do all those things, like the video, subscribe to the channel, all that good stuff. Check out the 3 links linked down below in the description. There is a free Discord chat all about AMC. Obviously, there is also the buy and sell alerts, like you guys already do know. Check that out. Very inexpensive. It pays for itself. Also, check out the link for public. Get up to $70 in your choice free stock. It only takes about 3 minutes time to receive that free stock. Literally 3 minutes and you will receive a free stock. It is the best thing that you guys could do for your financial future right now that is free. No need to even link a bank account or deposit a single dollar. They also do not use payment for order flow, so definitely check that out. Stay tuned for videos later on tonight and throughout the rest of this weekend. But that is all for this video. I will see you guys in the next one.